A well-designed tax code should be simple, efficient, and fair. In the real world, this means a broad-based tax with low rates and no special breaks. In other words, the tax code should be designed to extract just as much money as is absolutely necessary to fund just the proper functions of government. It should do this while doing as little economic damage as possible. Hello, my name is Maddie Doppler from Americans for Tax Reform, and I'm here to narrate this video from the Center for Freedom and Prosperity, where we'll be looking at how the Obamanomics approach to tax policy measures up to the ideal system. The president often says he wants everyone to pay their fair share, which is political speak for raising taxes on the rich, however he decides they may be defined. Yet the most recent CBO data on the distribution of household income found that while the top 20% earned 50.8% of total income, they paid 67.9% of all federal taxes. Every other similar grouping pays a lower share of taxes than their earnings. Indeed, the U.S. gets a bigger share of tax revenue from the rich than what is extracted from any other developed nation. Now, this class warfare approach lowers incentives for productive behavior, and punishing success, of course, is no way to grow an economy. Some people act as if the rich are some sort of piñata that are capable of supplying endless amounts of revenue. Yet even a 100% tax on every millionaire in America would only fund our bloated government for about 3 months. And that trick, of course, would only work once. Upper income taxpayers wouldn't bother earning any other income the next year, effectively killing that golden goose that laid the golden egg. Now, we can find insight into the president's approach to tax policy by looking at an answer he gave to a debate question while campaigning for the White House. Moderator Charlie Gibson asked then-candidate Obama why he wanted to raise the capital gains tax when historic evidence showed that lower rates produce more revenues. Obama's answer was that he could increase capital gain taxes anyway because of fairness, regardless of whether or not it was going to raise more revenue. In other words, President Obama sees the tax code as a means to enact a class warfare-based social agenda rather than as a necessary evil to fund the functions of government. But there's also another problem with his position. Capital gains are already a form of double taxation, so any tax is a mistake. As the flowchart on the screen demonstrates, capital gains are just part of how the tax code punishes investment. Not only is an individual's potential investment, and thus their future returns, already reduced by the income taxes paid on their initial earnings, but the investment itself is penalized with multiple levels of taxation from capital gains to dividends and corporate taxes, amongst others. This has the net effect of discouraging savings and investment, which every economic theory agrees is the key to long-run growth and higher standards of living. Even Marxist and socialist theory is based on the understanding that this is the best way to grow the economy, though it wrongly wants the government to be the ones in charge of the investing. Obama wants to increase the penalties on savings and investment even more. The Obamacare legislation included hikes to both capital gains and dividends, meaning we can expect reduced investment, slower growth, and lower standards of living, making Obamanomics harmful for the very poor people the president claims to want to help. Now let's briefly turn our attention to the death tax. This is the smallest source of revenue of any major tax in the United States, and even that is deceptive because the tax suppresses other revenues. While it was temporarily phased out for a year, it has returned at a 35% rate, and at the end of the year, it is scheduled to go to a staggering 55% rate. Despite raising little to no revenue, the death tax takes a heavy toll on the economy. Former Congressional Budget Office Director Douglas Holtz-Eakin estimates that returning to the 55% death tax rate would cost 500,000 jobs. Proponents of the death tax don't care about this damage it causes, nor the minimal amount of revenues raised, because they see the tax code as a tool to combat inequality. However, as we've seen, social meddling comes with a very high cost. Class warfare tax policy is a sham. Politicians always promise the public at large that they will only tax just a few rich people. But those taxes inevitably expand to hit most everyone, because the dirty little secret they neglect to tell you is that there simply aren't enough rich people to fund big government. When the income tax, of course, was first proposed, its highest rate was 7%, and it applied to only 0.5% of the entire population. Now, I don't need to tell you that the rates are a lot higher, and the burden of income taxes hit a much larger percentage of the population today. Further tax hikes on the rich will be self-defeating, in part because changes in behavior will result in far less revenue than politicians predict. It's the rest of us who will be required to shoulder a much greater burden of taxation if the welfare state continues to expand. The tax code should raise a limited amount of funds to pay for the proper functions of government. If this were the tax code's sole objective, it wouldn't be able to serve as a tool for class warfare Obamanomics. Instead, it would be far less damaging to the economy, and the nation, both rich and poor, would be much more prosperous. I'm Maddie Doppler. Thank you for watching this Economics 101 video from the Center for Freedom and Prosperity. Please be sure to share it widely.